Whether you're renting or buying, that is one of the biggest financial decisions that Canadians face. Right now, the numbers might actually surprise you. In many cities, renting a comparable home can cost thousands less per month than owning. On the other hand, homeownership can build equity and stability. And joining us now in studio to weigh the pros and the cons is Mark Ting, our guide to personal finance and a partner with Foundation Wealth. Hello there, Mark.
Hi.
Okay, well, let's start with the basics. In today's market, just how do the monthly costs of renting compare to buying a similar home?
Yeah, naturally it changes based on the variables in terms of type of housing or where you live. So I thought I would make it easy on myself. I picked my house. So I live in Richmond, house built in the 1980s. And when I looked and saw what the market was for rental, I could probably rent something similar to my house for about $4,500 a month. And then I did the math on home ownership. So I put my house, I valued it at $1.7 million, and I gave myself the liberty of having a 20% down payment. So I'm being pretty conservative because now we're talking about a conventional mortgage. And even then, after the mortgage, the property tax, insurance, sort of utilities, the mortgage itself would be about $7,400. And on a 25-year amortization, that me living in that house and paying the cost of home ownership would be about 10 grand. On 25 years, 30 years would be a little bit less at 9,400. So we're talking about a double here. So 4,500 to rent it, roughly $10,000 to own it.
That's interesting. I mean, that's an example, though, of a single-family home, right? Would the cost difference, you think, be similar if you were talking about a one-bedroom condo in Vancouver?
I crunched those numbers as well. So I picked the beautiful neighborhood of Mount Pleasant. And one-bedroom, fairly nice apartment there to rent it. Plus, I added in some other costs like insurance, content insurance. It would be about $2,850 a month. Now, assuming the same criteria, so conventional mortgage, 20% down, and a price of about $750,000 to buy this apartment, that cost of the home ownership would be about $4,240. So it's not a double, but it's about 30% higher than renting.
Okay. Well, I mean, a lot of people say renting is throwing away money, right? I mean, or our renters are simply paying down their landlord's mortgage. How do you feel about those statements?
Yeah, I disagree with them. I mean, everyone needs a place to live. You need a place to, hang your hat. So it's not throwing away money. You're getting, obviously, a use out of that. In terms of paying someone else's mortgages, in the past, that was true. A lot of these apartments, if you're a landlord, cash flow positive, that sort of a thing. But if you break down the numbers again, look at that house. So the house, again, rented for $4,500. The actual cost was about $10,000, or we'll say $9,000, just to be conservative. Of that mortgage, because if you bought it just recently, the vast majority of that mortgage payment, which is $7,400, most of it goes to interest. And only about 30% over that course of the 5 years will go to principal. So of that $4,500 you're getting in rent, it's not even covering the cost of interest in that case. So yeah, no, at this point right now, you are not paying down your landlord's mortgage.
Wow. No, it's really eye-opening when you put it that way, for sure. I mean, so what practical strategies can renters implement to strengthen their overall financial position in a market like today's?
So the goal right now is to strengthen their overall financial situation, which often means delayed gratification and discipline. So what I would tell people is, I think there's a better value in renting right now. You can be in better neighborhoods for lower prices, but you should think of the future. So let's say that Mount Pleasant apartment, the cost of home ownership is roughly $4,300 and you're renting it for $2,900. You'd want to take that spread, the difference, and invest it consistently all the time. You want to invest it somewhere, maybe in a TFSA or an RRSP, and do that no matter what. So the point being is, because if you have the home ownership, payments do go down. And you want to get used to making that higher payment, because in the future, if you're saving this money for a down payment and you eventually get into a house, you want to get used to those higher payments. So that would be my first tip.
All right. Now, what about potential home buyers? What are the main reasons that buying a home could still make sense.
And there's plenty of them. Like the first one is, it's a dream of many of us to own a home, a piece of land. The other part is taxes. We've all heard those stories of people who bought a house a long time ago and they've gone up maybe even millions of dollars, and that is tax-free gains for now. So that's a huge advantage. The other side is you can use them as a tool. Many people don't, but you could borrow against them. So if I'm looking at my life, there's no way I could have started my business, funded various projects, maybe even got some rental properties without actually using my principal residence as a collateral. But for the most part, most people just rather have their own home, and they like to see those payments go down, and it really looks like it pays off like decades later with that, say, $2,000 payment is 90% principal, a little bit of interest. It's very satisfying.
Well, so as a homeowner yourself then, and again, you used your own house off the top as an example, so someone who sees stronger value in the rental market right now, has selling your home ever crossed your mind?
No. And part of it is my stage in life. So I'm 52. I've had my house for 20 years. So my mortgage is quite a bit smaller than, say, someone who had to buy that house. I'm not paying $10,000 for home ownership. We'll just put it that way. It's significantly lower. And the other side to that is I'm comfortable where I am, and it's a hassle. Like, selling a house, you have to bring all these people involved. Someone has to buy it. I have to find a renter. And being in a rental is great when your toilet breaks down or your furnace breaks down, but it really sucks because not that really sucks, but it sucks in the situation if you get an eviction notice. So now I'm at the what's that word I'm looking for? I can be evicted by the landlord. So I always have that in the back of my mind that I have to worry about.
Okay, so you're not moving.
I wouldn't move at this stage of my life, but 35-year-old Mark possibly would. If I had just bought a place over a couple of years, I've only owned it for a couple of years, and I'm feeling very stretched because maybe my mortgage went up, and we all know the cost of insurance, property tax, that's all gone up much faster than, say, the pace of the rents can go up, then I would be thinking, well, in this market, when the spread is so wide, there's an arbitrage opportunity here. Sell my house, rent, invest the rest.
What are some of your observations about the current state of the market?
The market I've seen as actually sort of recovering a bit. So from spring, that was like dire because the whole world was worried about their jobs, interest rates, tariffs, all those things. No one was buying, no transactions. Now there's a lot more clarity in the market, and we're sort of seeing month after month a little bit of an uptick in buying. And I think a lot of people are hoping for a couple more interest rate cuts. Maybe the bond market comes down, so long-term and short-term mortgages. So more transactions. So I think we could see a busier fall, but not a super busy fall.
Interesting times, Mark. Thank you.
Thank you.
That is Mark Ting. He is our guide to personal finance. He's a partner at Foundation Wealth, and he joins us every week at this time.